In this video, I'm going to be doing a walkthrough of a three-statement financial model that I put together for a company in 2015. The reason why we are using a model that is so outdated is to ensure that we are not releasing any information that may be proprietary. Further, this company is no longer in existence, and we have still redacted it. Rest assured, anyone who works with me will never have their data released. I take that with the highest degree of seriousness, and therefore in any video you'll see of mine, we will augment names, we will augment numbers, we will use companies that are no longer in existence, just to ensure that no unsensitive information is released. As a financial analyst, I need the most sensitive information about a company in order to do my job. And in order to have that trust, I need to be very careful with your information. So, with that disclaimer out of the way, get right to it. You'll see in my models, I like to have things very well organized. If you go through these tabs, they're color-coded, there's spacers in between. That's key to building a good model. It's all about hygiene, right? I build models that are designed to stand the test of time, not to be built for a single presentation, a single board meeting, but rather something that can be used, updated on a hourly, daily, weekly, monthly basis, as forecasts get updated, as actuals come in from accounting, etc. This is designed to be a tool which you can run your business by, not simply impress an investor. So, walking through this, here I've got a control tab, right? This is where I'll usually keep a lot of things. Company name, subheadings, things like that, the starting date. A lot of these models could easily be refreshed for a following year or following period of years, depending on how long we're modeling out for. I think in this case, this is a 1-year model. With this particular client, they had a concept of what they called a BP1 or an MP1, a business plan versus management plan. You know, a lot of times companies like to have more aggressive numbers that they hold their management team to and more conservative numbers that they present up to the board. This model includes toggles to support that. We also have toggles to support for using a forecast or a budget for the particular quarter, right? So to say, okay, in Q4, we don't have a good enough bottoms up forecast on the top line revenue. So instead, we're going to assume we hit budget, things of that nature. We can do all sorts of toggles and switches and cool things to make it work. And yeah, so here, we've got lists of names and things like that. The other thing that's super important here is we make a point to not write things multiple times, right? Because, for example, if we wanted to change the name of a group from cloud services to cloud professional services, I want to change it once, and I want it to flow through everywhere, in every single output, in every single calculation, across the board. And so we're very, very careful with that. It's that type of attention to detail that will ensure the integrity of your model. It's not just how it presents, but also how calculations work, right? You're doing a roll-up of employees and everyone that's in cloud services, but then you change the name to cloud professional services, and if you don't change the one and the other, it all breaks, right? So we do a lot of things to make sure that happens. With this company, they had a CRM system, and I built a separate model for that, and had an output page that I copy and pasted in here, which then flowed through into the financial model. So built this in a very easy way where it was copy paste to get in. Again, this is dated 2015. We've since updated our methodologies to leveraging APIs and things like that, CSV files, to make it so much more streamlined than this, but this still got the job done pretty well. Here we've got a summary 3-statement model, right? Taking it all the way from the top of a P&L and income statement right here, where we've got various lines of business rolled up from the various different entities, as I'll show you off to the right, from revenue down to cost of goods sold, and OPEX expenses, etc. Here, this is done in what we call a practice view, right? Which means that we're looking at each category of the business as opposed to more of a functional view, which would be things like separating salaries from rent. Here, I'm separating out sales from marketing. We have all sorts of ways to build outputs where that's easily toggleable, if that's a word. So can show this in any way you'd like. Again, this was built for the specifications of a company. We can build, we have thoughts on what's best practice, but also can do it in a whole variety of other ways. As you scroll past the P&L, which is a roll up on the other from the other tabs that we'll get into further, we get into a balance sheet as well, right? As all full 3-statement models have, they need a P&L, balance sheet, and a statement of cash flows. And so here we've got that. And all of these calculations, blue is a hard code, green is a link to another cell, red is a link to a cell on a different tab, and black is a calculation. And so what you can see here, we have actuals in this example through Q1. So those are hard coded, and then we've got links down below to the calculations that derive these answers. For this particular model, this company had different types of debt. I believe there might have been a revolver in there. We'll go down there and take a look. I don't really remember. It's been a while since I built this. But we have the ability to do all of those types of things. Here, a statement of cash flows, again, forecasted out into the future to show exactly where that cash is coming from. That's interrelated to the balance sheet and the income statement, so they all three tie. Further down below here, we actually get into all the logic that drives the balance sheet values, which therefore drives the statement of cash flow. So here, as an example, we're looking at AR and unbilled revenue, and the assumption is that we have a 60-day DSO, right? So 60 days outstanding so what we do is we look back at the revenue from the last 60 days to figure out what should our AR balance be. And then we also have some one-time assumptions for a particular client that had material payment structures that were different than that standard 60 days, and so that was modeled for independently. And we do this for all sorts of things. This is a prepaid commissions assumption because commissions were paid once a quarter, et cetera, et cetera. Won't go through every single line item here, just so you get a sense, though. It's important to get into the details of it, especially if your business is one that's in high growth mode. You can't use general assumptions all the time, right? You're not going to be able to get it down to I spent $4 on a pencil. But at the same time, if you say, we're just going to use a 60-day DSO across the board, and you have one client that represents 50% of your revenue, and they have a very, very different payment structure. If you don't think about that, you might be out of cash. So super, super important. In this model, we went by region. So here we've got the U.S. And so the way this U.S. model works, essentially, without going again line by line by line, but at a high level, it's modeled at the general ledger level. That's super important, because what that means is that it then can hook up into our accounting system, and we can do a very granular comparison of actuals versus forecasts to know how we're doing from a forecasting perspective. Are we predicting correctly? How we're doing from an actuals perspective? Are we spending as we desire, right? And what needs to be tweaked and changed? And also, who needs to be talked to within a company of, hey, you're spending more money on your travel expense than we gave you permission to do, or your revenues are a bit light, or hey, you're killing it in this side of the business. Maybe we can invest further in marketing. By having this level of granularity, we have the ability to do that. Each and every practice line, as I talked about earlier, sales, marketing, product development, etc., can have their own custom formulas, right, in the way this is designed, and then it all rolls up, right? So it might be that, for example, the folks in product development need laptops that cost $5,000 a piece, but the people in sales need, basic machines that cost $1,000 a piece, whatever. And so we can do all sorts of different things, or logic when how cost of goods sold work, right? It might be very different in a services organization versus a software organization, and you may have both as subcomponents of your whole organization. And so to be able to do that level of granular modeling is something that I think is super important, and it's a great way not just to put together a presentation, but also to think through your business and understand what it's all about. Going to jump around a little bit just so I don't bore too many of you and just keep this relatively high level, but in a nutshell, thinking about things like fixed assets, depreciation, capital leases, and where the funding comes from, et cetera, all very standard. Here in this example, I've got multi-currency, again, something that may be relevant to you, may not. I've got plenty of experience in modeling in that way. When you do have a multinational, it is very important to model in local currency, because half of FP&A is talking to the business, understanding their situation. And if I'm on the phone with someone from London and I ask them to tell me about costs in dollars and their head works in pounds, you're just asking for trouble, right? And so instead, if I can talk to the language that people are most comfortable with, and they don't have to do the conversion rates in their head and get it wrong, and by the way, we pay in pounds and the pound to dollar rate moved 20 points in 3 months or whatever, it's always better to model in local currency. And so that's what we've done here. It also allows for different mathematical assumptions for different regions, right? It might be, as an example, in the U.S. we have FUTA and SUTA and Social Security and all that. The tax structure in the UK, again, as an example, is very different. Also, you have national health insurance in most countries in Europe, including the UK. In the US, we obviously don't have that. And so if you're offering benefits to your employees, maybe you're offering them in the US, but they're much different, say, in the UK, where they're getting their health benefits through the government. So, my models are very clean. They're very easy to be passed off to a controller or a more junior analyst or what have you for maintenance after I've built it for you, if that's your preference. I design these things to be handed off. I can make them as complicated or as simple as you'd like. If I know that I'm building a model for someone else to take over, I will be very conscious of that and build it in such a way where it is not overly burdensome for them to maintain. And in fact, I'll build things in where it is just a copy and paste to do an update, and a live link into maybe your QuickBooks account or something of that nature to make it work. And then finally, outputs, right? I'm going to blow through some of this stuff. If you have further questions, I'm happy to do private demos with you. But I build all my models in such a way where it's very easy to get outputs built that are easy to copy and paste into board books and the like, either on something that's like a once a quarter type of board book, or even management presentations that go out every single week. A lot of times these Excel files can get kind of heavy, right? They're big files. My files, I always leave on manual calculation, so that way they're more easy to operate. But as an Excel user, but as an executive, they might be hard to follow, and that's okay, right? What the executive should be looking at is an output. And so I always build models in such a way where there's a very clean cut output that then can be used. Here we're just looking at a simple revenue table at the top with a pie chart at the bottom. Ignore the red dots down here. Again, this model's from 2015, so it looks pretty old, but I think it's and I don't remember what that was for, but I'm sure it's fine. Anyhow, happy to build all sorts of things. P&Ls, balance sheets, cash flow. Again, once you have that main output done, then building here, as you can see, a pretty straightforward output on statement of cash flows is no big deal, right? The hard work's done. All the other parts, outputs are pretty straightforward, but can build them very quickly. So that's a quick run through this file. I hope you enjoyed it, and would love to be working with you.